Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 5:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. August 31st, 2018, and this is the daily report for gold and silver, our weekend review, and in this case, our monthly review. With the last trading day of the month concluding, we did have gold close fractionally higher on the day, although lower on the week as well as lower on the month. In fact, gold has now closed lower for the fifth consecutive month. Gold futures basis most active December closed up $1.90 at $12.0690. Silver did close lower on the day, losing approximately 2 cents at $14.57, but having a terrible month overall. We'll talk about that as we pull up our technical studies. Platinum also closing lower, down about $4. Really been on a rapid ascent in terms of pricing and has been outperforming all of the other precious metals. Now, the dollar itself was trading higher today, gaining about 0.4%, closing at 95.04, a net gain of 36 points on the day. And the indices themselves, stock indices, did well in terms of the NASDAQ, which closed at an all-time record high of 81.11, and the Standard & Poor's closing in essence unchanged at 2105, just off of the record high, and a slightly lower Dow Jones Industrial Average giving up 22 points at 25,964. Traders, even though gold futures did close fractionally higher today, gaining almost $2 on the day, it has now shown a steady and methodical climb, not only on a weekly basis, because as we can see on our weekly chart, aside from last week's activity, there has been a predominant trend as this market trades to lower pricing, really since April of this year on our weekly chart, and we can really see that when we convert this to a monthly chart, because here we can see that over the last 5 trading months, gold pricing has declined after hitting its record high this year at approximately $13.69, that also occurring in April, and then beginning a slow and methodical move to lower pricing. And traders, although since April we have seen a methodical move in gold to lower pricing, there were 2 key indicators that really signaled that gold moved from a simple correction in a bull market to an actual bear market. The first of those things is the fact that we actually had gold trade to a lower low than the previous low for the first time since the end of 2016. If we look at market activity, and this is a weekly candlestick chart, we can see when gold actually traded to a low of about 1040. From that price, it moved to a high that it still is unable to take out, and that is just at around 1370. That has been the price ceiling. But as the market came down, when we compared the next low that came in around 1124, we can absolutely see that that is well above lows that were achieved back in 2016. Again, we then saw a set of equal tops in the market. However, as this market would move up and sell off, we continued to have a series of higher lows. And that was up until recent activity, and that would be back at the beginning of July when we actually had the first lower low on our long-term studies since the rally began. That was the first thing that really signaled that we were not looking at a bull market simple correction, but rather that we had moved into a bear market. And traders, the other indicator that really signaled that gold was now in a bear market rather than a simple bull market correction was by looking at the moving averages. We are looking at a daily chart, and on this daily chart, we have put up the 2 moving averages that market technicians use to indicate bull or bear market. When we have a scenario in which the shorter term 50-day moving average crosses back above the longer term 200-day moving average. That is simply called a golden cross. When we have the reverse happen, we call that a death cross. And to many market technicians, including myself, that cross is actually the signal that a bull market correction has now morphed into a bear market. In other words, we are looking at a long-term trend rather than a simple correction. I believe that that continues to this day. In terms of recent activity in gold pricing, we have to acknowledge that about 2 weeks ago, we absolutely saw some price support come into gold when gold traded to an intraday low of approximately 1167. That is this candle here, and then began to track higher. In fact, for the next week, we would see the market trade and attempt to breach some resistance that we saw at approximately 1218, which corresponds to an important Fibonacci retracement level, the 0.618% retracement that occurs at this price point. A pretty large data set, approximately 2 to 3 weeks of trading activity, in which this price point and just below it was supportive because it did hold those prices until we had a major drop in which over a 3-day period we had the market move roughly $40 lower, and then on the Thursday following that we had the market trade to these lows before recovering. To this week's activity, we can clearly see that the market did close lower on the week, Monday's open being just below 1218, and today's close coming in at around 1206.90. We are hovering just above 1200 as we look at our futures markets. And when we look at spot gold, spot has been clinging on to that price point for the last couple of days. Spot gold also closed fractionally higher at 1201.47, which brings us to our forecast for next week. And what we are looking at is the critical level of 1200. If 1200 cannot hold as trading resumes next week, I believe we could definitely see gold retest the lows that we saw at 1178, which is where I'm putting major support. And of course, a break below that would challenge the yearly low that was a couple of weeks ago, just above 1160. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Tuesday for the next daily update and review. Bye-bye.